Hey bookkeepers, it's Trudy at Maven. Today I want to tackle fraud prevention in your clients' tiny businesses. A lot of times we do have very tiny businesses. We have small service providers like our plumbers, electricians, people like that, very small businesses. And there are only a handful of people anyway. So a lot of these tasks are managing money. And we don't have the spare staff to segregate everything. We don't have a fraud department. So you need very strong controls because the goal actually is simple. We are going to protect the cash and protect the credibility. Here's the risk. In plain English, fraud sits on three legs: pressure, opportunity, and rationalization. Now, you can't stop the pressure or the rational story someone tells themselves, but you can choke off the opportunity. And we're doing that by splitting touch points, not titles. Even in a two-person shop, you can separate who approves, who records, who reconciles. As a professional bookkeeper, your job is not only accuracy, you're actually the first line of defense for the owner. Very small firms often DIY parts of the books, or they lean on a part-time in-house clerk, and that creates blind spots. So you are the fresh eyes, you are the employee fraud spotter. So look for missing support, odd vendor changes, duplicate payments, and numbers that don't reconcile to bank reality. Your vigilance deters bad behavior and catches errors early, which does protect the cash and the credibility. Here are 4 field-tested controls that fit any tiny team. Firstly, cash and banking. The owner signs every check after seeing the invoices and a proof of receipt. No signature without backup. Deposits are made quickly, daily if they're cash, within 2 days if they're checks. Someone who does not make those deposits reconciles the bank. That can be you or the owner. Review electronic payments and debit card activity from the bank statement. No paper checks mean there's less built-in control, so the review becomes the control. And make sure you turn on banking alerts for any ACH or card charges over a set amount. 2-factor for all logins. Number 2 is accounts receivable. We use sequential invoice numbers, keep the voids and explain them. We compare invoice totals to what posted in the books, spot check prices, and tax. Mail or email monthly statements to customers. Third-party confirmation flushes out misapplied cash and fake credits. And lastly, owner approves all write-offs and credit memos and document the reason. 3, accounts payable. Pay only with full support, vendor invoice, approval, and proof of receipt of goods. Watch for duplicate invoices. Search by amount and vendor before you pay. Lock the vendor master file. New vendors and bank changes need owner approval. And lastly, 4 is our tech habits. No shared logins, simple written policy. Store check stock and signature devices in a locked cabinet. So if you have a name stamp or anything like that you use, lock that away with your check stock. And as well as any credit cards, if you have credit cards lying around, make sure those are locked, keys, all of that stuff. And keep your prior year bank statements and reconciliations accessible. Here's a sample micro segregation for small teams of 3, you being one of those 3 people. So we're going to think in roles, not job titles. Now, you fit in here wherever. You're going to have to decide that because you know both the situation and the players, all right? So, again, sample. Approve. The owner reviews and supports and signs or approves everything. Record. An admin can enter the bills and then cut the checks as well as invoices and make deposits. But then 3, reconcile. That's you. You did not handle the cash inflow or outflow. So reconcile the bank and the credit cards and give the owner a 1-page variance summary. Here's the hard, fast rule. Never have the person cutting the checks and make the deposits also manage the reconciliations. You need fresh eyes and you need an open perspective for fraud spotting. So now here are a couple of secret weapons you can employ. Number 1, require vacations for anyone touching money or records. Fraud needs constant maintenance, and time off breaks that pattern and allows you to audit that employee's work. 2, rotate duties at least 1 week every year. Even a light swap forces transparency. 3, keep a short standard operating procedure for employee reimbursements. One that says that they need receipts, one that says that there are no advances without prior approval. And lastly, make sure that there's professional liability insurance. That's a control that reduces the risk, and insurance will cap any catastrophe. So this is a 7-day rollout for you to implement these systems. Day 1, turn on bank alerts and always two-factor logins and lock up your check stock. Day 2, write a one-page approvals checklist. Nobody gets paid without it. Day 3, number invoices, keep voids, start monthly customer statements. Day 4, create a vendor change form. Owner signs new vendors and bank changes. Day 5, assign the reconciliation role to the person who does not write the checks or make the deposits. Day 6, build a 2-line report for the owner. Unusual payments this month and aging over 60 days. And day 7, put vacations and a 1-week duty swap on the actual calendar. And lastly, if your client issues employees credit cards, you need to generate standard operating procedures that protect the owner. You need to be very conscious of any spending. What's allowed? Have a standard operating procedure. Is it only for gas? Is it also for small equipment or tools that they need while they're out on the job? What's the limit? Is it $100 per use? Where are the parameters? What measurements are in place and how you track it? And again, don't let one of the card holders do the reconciliations. You do that. Look, fraud starves when opportunity is scarce. And even tiny firms can do this. Just split the touch points. Review the bank, require time off, document approvals. Your credibility is worth the routine. Protect the cash, protect the client, protect your reputation. Up next, 24/7 networking mode. You are now the walking, talking billboard for your business, whether you like it or not. So let's work that to your advantage. I'll see you there.